The next investment that I'm going to talk to you about is a company called Yield Invest. Now, I really like Yield Invest. We've been working together for the last 4 or 5 months now. And what I like about Yield Invest is, first of all, again, like all our investments, very, very educated financially. These guys have done their figures. They've looked at all the properties that they're looking at developing and the developments themselves. And again, like Arif and Ashbrook's Estates, they've given a very, very detailed breakdown of what they want to do with the projects. Now, what Yield Invest do is they build developments and they acquire normal houses in mainly the northeast and the north of England. And what they do is they rent them out on long-term contracts to, in the UK, we call them housing trusts or charitable trusts. Now, just to sort of give you a bit of background, for those of you that aren't in the UK, we're kind of in the midst of a housing crisis at the moment. There's not enough housing to for the amount of people that are in the country. So we have a social housing scheme here where we have like a safety net. So anybody that is can't really afford or has fallen on hard times or disabled or anything that might affect their ability to just pay normal rent or buy a property, they can rent social housing from a government body. Now, what Yield Invest do, like I said, is they acquire properties in the northeast of England, and now they're actually moving on to development, and they renovate them, they bring them up to a good standard, and they rent them out to housing associations, who will in turn put tenants in there that are probably society's most needy. People that can't get on the housing ladder or the rental market the normal way. Through these housing trusts, they're able to rent and get normal housing. So it's not just investment with this with this company, but it's also, there's an ethical element where you'll be, you're not just getting an income, but you'll also be helping the society's most needy. So we're going to be talking to Luke, who's the investment director of the company, and he's going to explain a little bit more about the project. But essentially, you've got 2 options with Yield Invest. You can either buy one of their properties, in which case they'll give you a long-term rental contract. So you can get about 9 to 10% rental income guaranteed for 10 years, which is really, really nice. So if you're a landlord at the moment, you probably know it's a bit of a nightmare trying to manage tenants, void periods, repairing, renovating after they move out, paying agents' fees, taxes, everything like that. So with this company, you don't have to do anything. You just rent this, you just give the contract to the housing association, they manage everything. You'll get an income of 9 to 10% a year for up to, I think it's a 10-year contract. So that's the first option. The second option, which we'll discuss, is a property bond, which Luke's going to talk to us about. So yeah, let's get straight into it. Luke, are you there?
Yes, yeah.
Hey, how you doing, Luke?
Yeah, good, thank you.
Good. Yeah, so I was just sort of giving the investors a bit of a breakdown about what you guys do. Why don't you just start off and tell us a little bit about the company, how you got started, and a little bit more moving on about the investment opportunities that you have at the moment.
Sure, thank you, Conrad. I think that you explained it very well in your brief explanation there, but Yield Investing was formed primarily to solve all of the headaches that landlords can experience. So the majority of our clientele are all overseas investors. And after operating in the traditional buy-to-let market for a number of years, we noticed that the same problems would continually occur. So that would be off-plan delays or tenants giving you issues of not paying rent, maintenance, the day-to-day hassles that every landlord who may be listening now or yourself has experienced. And we came across the social housing sector in the UK, and not only was it a nice idea that it was providing a benefit to vulnerable adults, but there's actually a great investment opportunity to investors. So when we first started out, we bought a couple of units ourselves and went through the process, and we're achieving a very high 9% return in Bradford at the time. And the investment worked perfectly. It did exactly what it said on the tin. It gave you a fully hands-free investment within property, where all of your maintenance, all of your management, and everything is taken care of under something that is known as an FRI lease. So that's what is applied to the property. And how we do that is within the local areas that we operate, mainly in the Northeast, we work with housing associations who are providing care for a vulnerable adult. So it could be somebody with life-changing injuries. There's a whole list of potential tenants that could be in these properties, but they basically need the support and care from the housing association. So we provide them with that opportunity by having a purpose-built accommodation that we've renovated up to meet their standards. In return, as an investor, what you're buying into is you own the property outright. It's your property the same way as you would normally, but you're renting it out to the housing association and they give you a 10-year income guaranteed from that with all of your maintenance, all your repairs and everything included. So it's quite simply that as a landlord, when you receive your rent, that is all you have to do. And that's probably a unique point to this.
Yeah, that's great. So just to cut in there, Luke. So I think as a, I've been a landlord, I'm not a landlord anymore, but one of the most frustrating things is just the amount of time that it consumes, being a landlord, dealing with tenants, dealing with agents, the boiler breaking down in the middle of the night, they move out, you have to pay for repairs, you have to do all these things. So am I right in understanding that if they were to buy a property through Yield Invest and it was rented out on a long-term contract to the housing association, they're not going to get any void periods, are they? They're not going to be responsible for the maintenance. That's all taken care of by the housing association, right? So when you actually say, look, I'll give you a 9% or net return, that's actually what they get net each year. Is that correct?
Correct, yeah. So these properties are already up and running and the rent is already coming in. So it's not a projection of what we think. They're already completed and they're all up and running with a tenant in place already. And the safety and stability for an investor is knowing that the funding for these housing associations and charities is coming from central government. So central government is paying that rent as part of our social structure in the UK. They're paying it to a housing association or a charity, and then you're receiving it as the landlord straight from there.
Perfect. Okay. So just on the actual, so in terms of security, they'll actually own a physical asset. So it's a little bit different to the property bond. That's their security, that they actually own the property. Now, let's just a couple of questions. I mean, again, guys, for you, just anyone that's in the live chat, any questions that you want to put to Luke, just let us know. One question I guess I would have if I was an investor was that, what's the exit strategies? If an investor wants to buy a property, if it's on a 10-year fixed lease, is there any opportunities for them to sell the property if they need to earlier, or do they have to stick with it for the whole 10 years?
Yeah, good question. So the lease itself is attached to the property. So effectively, the lease is fully transferable into the next owner's name. So if you're in year 2, year 3, whenever it may be, you can sell that property on to another investor who is buying it for the purpose of what it's there to do. You wouldn't be able to sell it to an end user because there is a tenant in place. And what we noticed was some people did feel that may be a little bit restrictive for them in that market. So we actually introduced now as well is a year 3 institutional exit that we have a track record of doing already. We've worked with a large number of institutions across the space, banks, etc. And they will give us an option in year 3 for our investors to exit the investment with a 10% uplift on what they bought the property for. So for some investors that are not necessarily viewing this long term, they can actually have the option for a sale in year 3 with our institutional exit for a 10% uplift on the capital that they paid for the property. Perfect.
So that's great, because that means that there's exit strategies should, because we live in volatile times at the moment, it's with the economy, global policy, we don't know what's around the corner. So I always try to say to my investors, always have an exit strategy in mind. So it's good that year 3 you do offer that option. So one other question I guess I would ask, is the rent linked to inflation? So would the rent increase over time with inflation or cost of living or not?
Yeah, exactly. So this was another thing that I think really just wrapped this whole product together. Rather than trying to go back to your tenant yearly to say, look, Mr. Smith, your rent's gone up in the area by £50, you need to pay it, or I'll have to find another tenant, and that can give you void periods or things like that. With this, your rent is reviewed annually in line with CPI, and it will increase accordingly with that. So it's capped at 4%. It won't increase by more than 4%, but it's called cap and collar. So when it goes up, it won't go back down. Perfect.
Okay. And could you just give us some general figures? I mean, what's the entry level? What do these properties start from at the moment for the physical purchase? And then after that, we'll move on to the loan notes.
Sure, yeah. So the asset sale to purchase properties, you are looking at starting from £80,000 is where our investments start. And then the kind of figure that we can go up to, depending on investors, we really have some opportunities available upwards of sort of 2-3 million, and even higher in some cases, if that is an option.
Great. Okay, guys. So just to recap on the first part of Yield Invest's investment is that you can buy physical property through them. It starts from £80,000 entry level, so that's what the houses start from. You're going to have a 10-year, is it a 9% rental guarantee, Luke, on that?
Yes.
Yeah, you're going to have a 10-year, 9% net rental guarantee. No void periods, no repair costs, nothing. That's what you will receive net. So if you are interested in this, like I said, there's at the top of the pinned live chat, just fill in the form and you'll be able to get the full investment pack on that. So that was the first part. Now, for those of you, obviously, that don't want to own physical property, they have got another option for investors, which is a loan note. Luke, do you want to just take over and explain a little bit more about that product?
Yeah, I guess it comes from what we're trying to do as a company is to make things as easy as possible for every kind of investor. And you're very right that not everybody does want to be a landlord. They may not want to go through the full process of buying the property with the solicitors, and maybe they don't want their capital tied up for as long as they've got long-term goal the property is. So we introduced a loan note to obviously help us aid certain development that we want to get involved with and larger scale operations. But what that offers an investor is a more short-term investment horizon. So there's two opportunities available. They're both a 24-month term. So you can either have a 10% return per annum, or alternatively, you could do a 24% return after 2 years. And they both start from £10,000 as the entry level investment. So I think with that as well, it also allows people that we had a lot of investors that love the idea of this. They said, you know what, this is great. I really like what you guys are doing, but I don't have £80,000 at the moment. So we went away and we worked out ways that we can kind of introduce this. And this was the best way that we could do it, which benefited both ourselves and investors.
Perfect. Actually, I just had another question from one of our investors, a very good client of mine, Vijay, who's just asked, can you buy a share of the property rather than the whole property? Well, Vijay, I think actually the second option that we were just discussing now, which is the property, well, the loan note that Yield Invest do, would probably be the closest to that. There's the lower entry level, completely hands-free. So that's probably something that would be more fitting with your question. So just to recap, Luke, so invest from £10,000. You've got a trustee in place, I believe, as well. Is it Castle Trust in Gibraltar? Correct, yeah. Security-wise, what protection does the investor have on this loan note?
Yeah,
is it a company debenture?
It's a floating charge over the asset. Yeah.
Perfect. Okay. So I think that's pretty much it. So with the loan note as well. So there's two options with that, guys. Invest from £10,000. Luke, sorry, could you just recap on the returns on the 1 and 2 year option, or is 24 months?
They're both 2 year options, 24 months, but it's broken down into two different scenarios. So if a client wants to receive a return after 12 months, then they would get 10% and 10% after both 12 months. Alternatively, if a client was to take the return after the full 24-month term, they then would get a 24% return. So it's slightly higher if you wait to receive the interest on that.
Yeah. So BJ just asked again, can you roll over the low note? I don't think you can roll. You can roll over, can you? So I mean, but I think that he's talking about getting compound interest. So I think if he wants to get the higher interest, he'd need to commit for one of the options. I don't think you can go for one option then change it halfway through, can you?
No, yeah, you're right.
Okay, question from David Price. How does an investor sell the low note? I can answer that actually, David. You don't actually need to sell the low note. One of the nice things about these types of investments is it's got a defined exit strategy. So you don't need to sell it. You don't need to. It's not like you need to sell a property. This is a fixed term investment. So like Luke's saying, after 2 years, they just repay your capital, and your capital gets repaid. You obviously have the opportunity, and I'm sure they'll encourage you to reinvest with them. But if you want to exit after 2 years, it's simply an email that you just tell them, look, I want to exit the investment. Your capital's repaid, and obviously any interest repayments that are due on maturity. Question from Mike Goldsmith. Entry sum £10,000 or euros. I'm pretty sure it's £10,000, right, Luke? Minimum entry. Right. Oh, actually, that's a good question, though. One thing I talk to my investors about is, with the volatility in the world, to have investments in different currencies, pounds, dollars, euros. Is there an option if an investor wants to invest in dollars or euros, or with this particular investment, is it just sterling that they can invest in?
So there is an option where they can use dollars or euros as well, and that is available for them.
Perfect. Okay. I hope that answers your question, David. Vijay, so for longer maturities, I think, look, we've got quite a few different opportunities with low notes, but what I would say is you can get what's called compound interest. So the longer that you leave it in, the interest will compound each year. But you have to look at particular products that do that. So what you're probably better off looking at doing, VJ, is looking at a 12-month investment that you can reinvest in each year, or a 2-year investment that offers, again, a 2-year extension on that. But yeah, I understand your question about long maturities. I think that's it. Anything else that you wanted to add, Luke? Anything else that you'd like the investors to know?
No, I think the only other thing that I would mention is for investors that are looking on a larger scale, we have introduced a very recent equity into the properties as well. So you can get involved in a much earlier stage as part of the development for some people that are looking at larger ticket investments. So that is something that if people did want information on, I could share with.
Yeah, again, guys. So sorry, that's something we should have mentioned as well. So again, we're always open, and Yield Invest, they've identified some very interesting projects coming up in the future. So if you're looking at joint ventures, or if you're looking at any high-level investment amounts, just submit your details or message me directly. We'll have a chat. I can put some options to you. But yeah, all the investments that we've got, particularly Yield Invest at the moment, they've got some exciting things coming down in the future, and I know they're open to joint ventures as well. So definitely keep that in mind, and don't forget to fill in the form on the live chat. Cool. All right. Well, listen, thanks, Luke. I'm sure we'll, like I said, be in touch again soon. Thanks for answering all the questions. And I think unless that's it, thanks again.
Thank you very much. Cheers, Conrad.
Cheers. Take care. Bye. Okay. Look, guys, that was, for me, it's a nice investment because it's got an ethical element to it as well. You're not just investing in property and getting a good return. But you also, you're helping people, and you're helping people get on the housing ladder that are really in need at the moment. And, obviously, I'm from the UK, and I see it more than a lot that, we had 20 to 30,000 people on housing waiting lists. It's shocking. The government should really be building more housing, but for some reason, government after government haven't done this. So having a company like this that steps in and can do this, it's a win-win. It's a win for you as an investor because you're getting good returns, hands-free. And it's helping out the housing trusts with a severe lack of accommodation. Okay.